Welcome to Counsel Culture, the Business of Law podcast brought to you by Byfield. Welcome back to Counsel Culture, the Business of Law podcast. This week, Michael is back on the podcast. Hello, Michael. We've not seen you since before Christmas.
Hey, Meg. Nice to be back on. It was nice to have a bit of a break over Christmas, but also good to be back. And it started quite busy, hasn't it, this year?
Yeah, for sure. It's been really busy so far, but let's dig in. Starting with some financial results that have come out. Let's start with the listed firms first, actually. For a number of years now, people have been saying, listing is not quite right and all this stuff. Well, if you've seen Gately's and Knight's results, you might think differently. Clearly, they've done fairly well for themselves so far. They've seen an increase in profits and revenues. So it's not too bad. It's not all doom and gloom. What are your thoughts on kind of how they're doing so far and kind of the mix of their practice areas now?
Yeah, I mean, I think, look, for good reason, people have been the London equity market has been not exactly in the healthiest state for a little while.
Yeah.
But within that, as a subset, listed law firms have done particularly poorly. You'd be hard-pressed to find investors who would say investing in a listed law firm makes sense. But one exception, I can't, just to focus on Gately, who seem to be the ones who have quietly got on with stuff, made the model work, diversified, not in a showy way, but professionally just, making it work. I'm not sure if that's fully reflected in the share price, but in terms of their financial performance and professionalism and progress, they seem to be well run. And also, it's interesting to see this diversification beyond just legal services into professional services more generally, particularly in consultancy, both through acquisitions and also organic growth. And I was particularly struck by the fact that the organic growth in the non-legal services is 3 times higher, I think, than the growth in legal services at the moment, which, I think is interesting. Is it a model for everybody? No, but I'm not sure that the exception proves the rule either. I think they actually prove that it is possible to run a listed law firm well. It just hasn't been done very often. And it is possible for a law firm to diversify into other services. And we are starting to see that, but we see it in sort of boutiques and things like that, like Schillings with reputation management services and others. But we don't see it play out publicly quite so much as we do when it's a listed firm because of all the disclosure requirements of being listed. So, good on them. I think it's nice to see that it can work. And I think it poses questions to an extent for the people who haven't made it work. In the we're in the nicest possible way. What did you do wrong? Because it's not just the market doesn't like law firms, or there's something inherent in legal services that completely prevents it from working. I'm not saying it's easy. I'm not saying it's the right model for the profession overall, but it's clearly not impossible.
For sure. And I think, when there was a boom of firms suddenly listing, I think a lot of them kind of potentially might not have thought it through in a way that was long-term, that would have made sense. And I'm trying to say that in the nicest way possible, but I think it's difficult to plan because obviously it's a risk, right? Like ultimately it is, whatever you do in business will always create a risk, and you can't expect the share price to always be good, and you can't expect the markets to be stable at all times. And obviously there's been so many factors in recent years, political, geopolitical, you name it, pandemic. There's been so many factors affecting it. So
let's just rewind a little bit and get out there what you're alluding to. I think if you have a group of partners who want a big payday, and it's not about building a sustainable business. It's about realizing the value of all that equity in one fell swoop. Having like if you think back, well, I can just about think that back this far. You probably can't, Meg, but when investment banks went public, and you had massive payouts for partners at the time of listing, and obviously they then continued to be incredibly profitable and so on and so forth. But that was a huge payout, and I almost think that at the beginning of the law firm listing boom, people were thinking like that. I can get a
Yeah.
massive, and it was about the drivers were wrong because it didn't play out like that, like
Yeah.
investment banks at all. And if your starting point is purely the owners of the business want a bigger payout as possible and they're not that bothered about a sustainable business model or how they transition the revenue flows and the workflows to others beyond, how do you incentivize those people who come into the business who don't have as much equity or the same in the same sort of structure? How do you incentivize the people who've just had massive payouts to continue to deliver for the business, or if they're not going to transfer the relationships and the work and the knowledge to others. So I don't think any of that was necessarily done in the earlier stages of listings, and
Yeah.
a lot of listed law firms that went spectacularly wrong. It gave a sense of people out for a quick buck rather than an attractive long-term opportunity for investors, because equities are about, you buy equities, you're going to generally hold them. The majority of people are not day traders. You buy equities, you hold them for the long term. That means at least 3 to 5 years, 7 years, 10 years, who knows?
Yeah.
And if there is a misalignment from the start, if it's a quick buck payoff with no idea of like how it's sustainable and viable, and it is nice to see, but it's not impossible to run a law firm as a public company.
Yeah. No, for sure. For sure. Turning to Quinn Emanuel's London financials that came out this week. Obviously, they started the trend already, so they've made 220 mil pounds in 2024, which was up 12% on the previous year. So clearly they're doing well. You know, the litigation market, I think, has been really busy overall, so it's not really a surprise to see a big player kind of doing really well. But it's the start of financial season for a lot of US firms in particular, so I don't think we can really make predictions as of yet, but it's encouraging to see that, they've gone early, they've gone with obviously a good figure. I don't think they would have done otherwise. Um, but yeah, I wonder what's going to happen next with the other ones, who's going to be next, and if we can kind of figure out a trend for this year and how it's going to set the tone, really.
Yeah, I mean, obviously, Quinn Emanuel have got a quite long established tradition now of being first out with London financials, and they make a point of doing it in the first couple of weeks of January and have done for quite a long time. Obviously, it's helpful if you have strong results, and they had such a fantastic year last year, and I think the year before that too. So this is kind of more normal, I think, as mentioned in the lawyer article about this, or in Litigation Tracker. The litigation focused firms, I don't really call Quinn Emanuel a boutique anymore because they're not too big. But litigation focused firms are a little bit more exposed than firms that have got the natural hedge of transactional work and litigation, because there is an element of risk-based decisions. There will be success fees, etc., taken on, and if those pay out, you know, you can have insanely profitable years, like ridiculous
Mm.
off the scale, and then it falls back to something normal. So obviously, I'm sure they're very pleased to have made some progress on the revenue front, despite the fact that last year they had a big jump. Um,
Yeah.
but also with the risk-based decisions about cases to take on, fees charged, etc., etc. There's a downside too, and I think it is alluded to in the results, or there's a reference to
Yeah.
write-off of fees and costs relating to historic matters. Write-offs will be higher. The business model, if there is more risk in the model, then that goes both ways. Sometimes it will pay out enormously, and sometimes it will, there'll be some additional costs that were unexpected. And so you see that. I don't think they set the tone. Quinn Emanuel does not set the tone for London
Hmm.
results as
No.
such, because they do sort of stand alone as a sort of top player in the disputes market, which remains pretty buoyant. So I think they do say something about, we should expect, strong performance from litigation practices and litigation focused firms generally to be doing quite well. I'm not getting the sense that I don't know globally, but I'm not getting the sense in London, but it's been a massively bumper year at the top of the market,
Mm.
more sort of steady. There will be some outperformance and some standouts where some firms will have pulled away further, and I don't think that there'll be firms that have suddenly seeing big falls in revenue or anything like that. But you know, if you did 15% in revenue growth last year, maybe it'll be 8% this year for
Yeah.
a lot of firms. It feels good but not spectacular, I think seems to be the sense, but it's a bit early to say, and I'm at significant risk of being wrong.
Yeah, no. Yeah, no, it all makes sense. I think it's positive for early in the new year, right? Like, I mean, so let's see what comes up next. I guess that's all we
Yeah,
can do, and then we'll be able to kind of get a better picture, I think.
we should also note that a profit margin of 65% is like still insanely high.
Yeah.
And I think anybody who works in professional services, whether it's legal, accountancy, consultancy, or hey, PR, looks at that profit margin and thinks, yeah, I'd like a bit more of that.
Don't we all? Um, um, Next up, a story from law.com, kind of a long feature from the US side, about kind of law firms. It's a really interesting topic about law firms kind of struggling to make various tiers of the echelon kind of work together in terms of competitive pay. And this one focuses on non-equity partner pay in particular, and how it's kind of affecting well, the non-equity partners themselves, in comparison to some associates who are getting huge payouts too, and some counsels as well, and then in comparison to equity partners, where sometimes actually the non-equity tier might earn a bit more in some of the firms in the US. So it's a fascinating one. I mean, it's obviously not new, but the kind of ongoing pay war just highlights those complications a lot more. And they were saying that there is internal friction at some firms, um, between various levels, around pay and bonuses and whatnot. So it's fascinating, and I think this is where we kind of think, is it actually really sustainable, all of these increases? And I think it's reflected not just in for clients, but also internally in terms of culture. Um, it's
Yeah,
yeah,
I think. Look, I mean, this may be a controversial statement, but I think salary and pay transparency is like is if you are if you're an equity partner,
yeah,
all of this, all of it, all of this pay transparency among non-equity tiers and senior associates, etc. It's like the worst thing for your businesses. It's like, but I think the more, this might be controversial, but the more opacity and the
yeah,
more confusing it is, actually, the easier it is to run businesses profitably. The more kind of like slightly weird levels of everybody should get paid this, and the more you max out on transparency, I actually think the worse it is, because it just defaults to those who can pay the most scoop up the best talent, and it's all very linear.
yeah,
It's very hard to avoid that. It becomes very sort of pure based on money, etc., and it's very simple to a certain extent, but actually it's a nightmare if you're trying to run businesses profitably, because it's harder to make hay out of your other strong points like culture, different types of rewards and incentives, etc., etc. when there is always a very obvious, we're getting paid this much, and we know we're getting paid this much, and we can look over there and we see that they're getting paid that much, and that's not fair, and then you have to ramp up your costs. So I think from a business perspective, the level of pay transparency in the legal market is insane.
Yeah.
It is insane, and nobody would design nobody would start from scratch with a system like, right, we're going to make it really clear that how much your rivals are paying. Yeah, everybody's going to be pretty transparent, and you can all see how much you can get somewhere else. And it's evolved, and you can't put the genie back in the bottle or anything like that. But it it does make it very hard. So I actually, oddly enough, think that the more the more complexity there is across the market beneath equity partner pay, probably the better it is in terms of ability to run businesses, and slightly obfuscating. People might not, know what they can get elsewhere, et cetera, et cetera. And businesses should be able to have compensation systems that suit them and their strategies, and not be led by their competitors.
Yeah, no, I agree. And like when you put it that way, it's quite interesting, this obsession with being transparent about this, when most businesses they wouldn't even advertise on LinkedIn how
Absolutely
much they're
not.
paying people. Do you know what I mean? Like it's just a bit insane. And when you think about it, lots of businesses don't even put like a pay range when they're advertising for jobs on LinkedIn. So why would you just put out every few months, we're paying our associates this much and our trainees this much? It's when you put it that way, it's very strange. And also it's interesting that we've seen some firms move to, for the partner level, a black box system, and having that kind of
Yeah, and
confusion at that level, which I assume kind of trickles down a bit further down as well.
yeah,
I don't
weirdly,
think that's unhelpful.
no, I mean, again, I think I think on one of the first times we did the podcast, like maybe, I don't know, a couple of years ago, we talked a bit about about firms and having black box compensation systems because somebody had moved to one or whatever. And we talked about Jones Day, and I think uh, from I'm not talking about from if you're in it, um, but from a rational business perspective. What I mean, what I think black box makes sense. It
Yeah,
does.
it
You're gonna
does. It
get,
does.
if everybody's getting paid. Frankly, if you're an equity partner at a large international law firm, you're getting paid a fortune by normal people standards.
Yeah,
Okay,
yeah.
and competing with people, with your colleagues all the time, or bad feeling about this, that, and the other, etc. I mean, you know, I'm not saying that it's going to change or anything like that. But if you step outside and you sort of just think, hang on a minute, would you ever design a system like what we currently have around transparency, etc. And no, you probably wouldn't, would you? And I can see, it does depend on firms' culture. Some firms, I think, transparency internally and a lot of things is what they're all about, and that makes sense. But for other firms, black box approach does make perfect sense, and having a plurality of systems is a good thing. There is not, I don't think there is a compensation system that is the best.
No.
There just isn't. There is a quid pro quo, there are trade-offs, etc., etc., and that's where it comes back to what is your strategy? What do you stand for, and who do you want to be, and what is your culture like? And if it is all about driving the highest salaries, doing the best client work, paying people more than anybody else in the market, that's fine as long as it's transparent. That's perfectly okay, and it's not for everybody. So I think reading this article and seeing that there is quite a few different ones, and there are overlaps, and it is kind of messy and it is confusing, is actually healthy.
Yeah. Yeah. No. I find it interesting. I find it, like, to me, it's just, I just don't understand why people are even bothered, because from my point of view, ultimately your own pay is your own thing to own and your own thing to actually discuss with a manager. And if you feel like you need a raise or a promotion, that's a one-on-one issue, and I don't think you need to bring in the rest of the company with you, like all of the people in your department that are at the same level to kind of compare yourself. Ultimately, it's about your own performance, not the others. And, it's bound to be unequal because people negotiate differently. And if, I just don't really.
Look, I mean, I remember, there's a saying around, the fastest way to make yourself unhappy is to start comparing your income and your wealth with those around you. And I think, as a general rule in society, if you if you could see the income and whatever of everybody on your street, I know you can guess at house prices, but if you live on the street, your house is probably in a similar ballpark to somebody else's. But if you started going around with the parents at the school gate comparing salaries, etc., you're going to make yourself miserable pretty quickly.
Yeah, completely, completely. Next up, a story from Molly Smith, again at law.com, that just came out today, actually. Obviously, Trump is about to take office on Monday, for a second term, and her story today focuses solely on kind of, what that second Trump administration might mean in terms of US firms collaborating with their European counterparts. And it's fascinating. She goes into kind of the antitrust side, M&A side, and all of their regulatory piece as well, which I think is going to be really key across the board, really. So, I mean, I don't know what I really don't know what to expect from this second term. I mean, I think it's clear that businesses seem to be somewhat kind of positive about what's going to happen, but I think it's such a kind of volatile um administration, and I don't know. I think it's going to be an interesting one. They definitely want to get rid of some regulation, especially in the tech areas. So I don't know. I don't know what to expect. But I have no doubt that that will translate somehow in more work for lawyers on both sides of the pond. So I don't know if you had any thoughts on this, Michael.
Well, it's an I mean, I kind of think, and this is no offense at all to Molly, because sometimes you have to do these things. It's just like it's a roundup of stuff going on that's sort of tangentially been hooked on to Trump's second term. I mean, like, I'm. I don't think there's a genuine link between Trump's second term really driving unusual alliances between US and European law firms. I genuinely
No.
don't. I don't think that is true. I think that you know firms based in the UK or European firms without US offices are continuing to seek different ways to win US work with US clients, etc. But the driving force of that is not Trump's second term. The driving force is the fact that the US economy continues to dominate the global economy and
Yeah.
is continuing to fly very high to the point that it's having I feel a bit sorry for the Labour government this past week or so. I don't generally make a habit of feeling sorry for politicians, but I did feel a bit bad for Rachel Reeves this past week when, frankly, the the bond market issues making gilts more expensive to issue, the cost of debt rising for the UK government, is purely driven by the upsets in the global bond markets because the US economy is kind of overheating and Trump's policies might be inflationary, and the economy is doing really well, which means interest rates are not going to be cut, etc., etc. So bond prices fall, bond yields rise, cost of debt becomes more expensive. We don't have the growth that the US has, but we're being impacted by the increase in debt. So,
Yeah.
sorry, I've gone off on a financial market tangent there. Apologize. But it is that US growth and economic strength that is driving cross-border work, etc. And it may be that Trump accelerates that, but if he accelerates it too much, we're going to see inflation. Um, he's also completely unpredictable and
Yeah,
frankly
completely.
insane. Frankly insane. So who
Yeah.
knows? But the US hold on the global economy continues to grow, and that obviously means that US businesses, including US law firms, continue to grow in power and influence, and it means that firms without offices in the US continue to seek new ways to partner up with US firms and do work. Yes, M&A probably will see an uptick. Disputes probably aren't going to slow down. I think it, there isn't any sense that things are about to fall off a cliff or anything like that. So, of course, businesses want to get a bigger piece of the action when it comes to US economic growth, however that plays out. Some of the stuff around, like, there's a quote in here, we live in transformative times more so than before. I'm not sure. I'm not sure that we always live in transformative times. Things are always getting, in some respects, more complicated, but also getting simpler. We talk about increasing complexity in the world, etc. But actually, you think about how much easier it is to do things, the amount of things that because of technology, the underlying technology might be complicated, but it's making your life a hell of a lot easier. So life is in some ways more complicated, but in some ways it's a hell of a lot easier. And so, you know, there is always going to be change, and it's easy sort of messaging to have, but fundamentally, the driver here is the strength of the US economy and the increase in the power and influence of big tech and the role that AI and other technologies are having on the world. So people want to be part of that. The legal sector is no different to any other part of the economy in that regard. And I think this article just sort of expresses that in a way which is linked just in a time-bound way to the fact that Trump is about to take his second term. God help us all.
I know, actually, I think a more interesting story almost would be, um, you know, whether we're seeing any frictions from the fact that, people might be Republican, as in like MAGA Republican, and that kind of stuff among the legal industry, between, you know, colleagues in firms or even with clients. I wouldn't be surprised if you had some GCs who, as part of their kind of push towards DNI and all this stuff, and have requiring some firms to, have a panel with quite a variety of people, you know, I wouldn't be
Yeah, they
surprised
might.
if this was the
Yeah.
kind of stuff that would actually trigger them if they knew that, one of the partners on the panel actually
Well,
actively voted for
I,
this guy.
I think it might be the other way around, where you might see you've had in 2023 you had ESG backlash, which has continued. Obviously, the sort of war on woke, or whatever I want to call it, accelerates again, and you've seen that being taken up by you know the leaders of big tech as they get older, doing what people do when they get older, particularly when they're very rich and privileged, etc. And they don't really have to. They're not necessarily connected to society in quite the same way. They become more set in their ways, like people do, and they become reactionary.
Yeah.
And so there is a drift to the right, which has happened in the leadership of big tech, and also people being opportunistic, Zuckerberg or whatever, just flipping towards Trump because that's the way the wind is blowing.
Yeah.
But the tone is set by political leaders and business leaders to a large extent. So what you may see is actually some of those requirements, companies saying we want panels showing diversity, etc. You might get some companies that drop that.
Yeah, completely. No,
It
for
might
sure.
be, it might be not, where it might be the case that it's not the general counsel who's looking at the partner who's been a vocal supporter of Trump and MAGA. It might be more a case of the corporate executive who it says to his or her GC, why are we making our suppliers like pay regard to diversity? I just want the best people, bin all these requirements, make it all about who's the best. Um, and so that's what we could see instead. I don't know if we will, but I would say that is we will probably see some of that. The
Yeah.
extent to which it goes outside of the US, I don't know, but we've already started to see D&I initiatives and policies in hiring and stuff like that going, either being downplayed or binned by some US corporates, and that will flow out to you know how they deal internationally, etc. So let's see.
Yeah, completely. It's interesting. It's like when Brexit happened, I think that was for some households, it's like a really like divisive thing. And I think this in the US is their equivalent. And I don't know if that translates into relationships at work. But yeah, it's an interesting one. last but not least, the Bar Standards Board put out a statement stating that they may look at kind of their guidance around barristers' ethical conduct and how they kind of manage their duty to the courts versus their clients. And that's amid a whole kind of clamp down on or scrutiny at least on harmful behavior in the workplace as well at the bar. So it's interesting that they're really questioning all of these things. They quote that the post office inquiry is kind of driving that thinking at the moment, which I don't think anyone's surprised by, to be honest. Don't know if you had any thoughts on this, Michael.
Yeah, look, I mean, I was talking a little bit about, I was talking to a barrister yesterday about, not this specifically as such, but how sometimes the bar lives in its own little world and
Yeah.
forgets the outside world can see them and what they're doing. And I think, I think backing your client in an adversarial situation is
One thing.
clearly you're going to do that. I think it's
Yeah.
very hard to draw a line of where do you go to. Well, no, I mean, it's pretty easy. I mean, if you're doing it in the best interest of your client, but if you're lying for your client or if you're concealing evidence or you're not, that sort of thing is different. But being a good barrister acting in the interest of your client, even if you are zealous, I don't think is necessarily problematic. But the culture of the profession, I think, is more of an issue because it is true that the bar has been very late to the party relative to other professions in tackling things like workplace bullying and issues like that.
Yeah.
And there is an initiative now and so on, but it's late, and certainly there's some evidence that bullying or poor practice, if not abusive practice, is common.
Mm.
And just expecting a profession to sort itself out without oversight or without regulatory initiatives or without some kind of framework in which to work, is not really going to be very effective. So I think it would be wise for the profession to pay heed to the fact that it is late to this and to take it seriously in terms of tackling bullying, discrimination, and harassment, because it does happen. Apparently, it
Yeah.
happens quite a bit to some level. I'm not saying it's necessarily reaching legal thresholds. A lot of it may be poor practice rather than full-on abuse, but there is definitely a problem at the bar in this regard that needs to be tackled, and it
Yeah.
is being tackled, but it's being tackled late, and people need to appreciate the lateness doing it and also engage properly with the initiative to address some of the issues. It's never going to stamp it out completely, but you want to ensure that you have a framework for dealing with things appropriately, that chambers have a framework for dealing with it appropriately, and everybody knows what the rules are.
Yeah, absolutely. So yeah, there's definitely going to be more movement on that throughout the year, I think. So definitely one to watch. But anyway, that's the end of the podcast today. So thank you, Michael, for joining.
Thank you. I enjoyed it.
And yeah, and to everyone, you can find us on Spotify and Apple Podcasts, and we'll be back next week for another episode.
You've been listening to Counsel Culture, the Business of Law podcast brought to you by Byfield. Thanks for listening. Don't forget to subscribe and join us again next week, where we'll be discussing some more of the biggest stories in the legal sector.